Welcome to The Explainer. Today, we are tackling something that has totally reshaped a huge global industry, a new accounting standard called IFRS 17. Now, if you've ever looked at an insurance company's financial report and thought, am I reading a different language? You are not alone. And that's exactly what this new standard is all about fixing. Okay, let's just dive right in. The source material doesn't beat around the bush at all, calling IFRS 17 the biggest game changer in the history of insurance accounting. I mean, that is a massive statement. And over the next few minutes, we're going to break down exactly why that might be true. To really get why something is a game changer, you first have to understand what the game looked like before. And before IFRS 17, the world of insurance accounting was running on a standard called IFRS 4, which, well, to put it lightly, it was kind of the Wild West. So the big problem with the old standard, it all came down to a total lack of consistency. Under IFRS 4, there were no strict rules, which meant companies could use all sorts of different methods. For an investor, trying to compare two insurers was like comparing apples and, oranges from a different galaxy. You could look at two reports side by side and have absolutely no real idea which company was actually doing better. So, to clean up this accounting Wild West, the powers that be introduced IFRS 17. And the goal was pretty simple, really. Create one single global language for insurance contracts. The idea was to make everything clearer, way more consistent, and finally, actually comparable. The official objective really gets to the heart of it. You see those keywords, relevant information, and faithfully represents. This is all about moving away from that murky, confusing past and toward real clarity. It's about creating one standard so that anyone, you, me, an investor, can get a reliable picture of how an insurer is really doing. Okay, so that's the theory, but what does this new framework actually change in the real world? Well, the best way to see the impact is to put the old rules and the new rules right next to each other. First up, and this is the big one, comparability. We're moving from all this variation to a consistent treatment. This is a huge deal, especially for those big multinational insurers that might have been using different accounting policies in different countries. Now, finally, everyone is on the same page, speaking the same financial language. Now this is one of the most fundamental shifts. What revenue even means. Under the old rules, some insurers could take your entire year's premium and book it all as revenue on day one. IFRS 17 says, nope, not anymore. Now, you can only recognize revenue as you actually provide the insurance coverage over time. This one change finally brings the insurance industry in line with how most other businesses work. This next change is absolutely crucial for keeping things relevant. See, IFRS 4 allowed companies to use assumptions, like interest rates, from way back when a policy was first written, even if that was decades ago. IFRS 17 forces them to update all their key assumptions every single time they report. This makes sure the financial statements reflect what's happening today, not some ancient history. Another huge improvement is transparency around risk. Before, the cushion an insurer held for unexpected claims was often kind of hidden or bundled into other numbers. IFRS 17 demands a separate, explicit risk adjustment. This means that for the very first time, investors can look at the books and see exactly how much of a buffer a company has built in for those just-in-case moments. All right, so like any new set of rules, IFRS 17 has very clear boundaries. It doesn't just apply to everything. So let's do a quick run-through of what's in scope and what's out. So, what's in? Well, no surprise here. It covers the bread and butter of the industry, the insurance and reinsurance contracts a company issues. It also covers some investment contracts that have something called discretionary participation features. We'll call them DPFs, which is just a fancy term we'll break down in a second. And just as important is what's out. Things like the warranty on your new laptop, your company's pension plan, or most financial guarantees, those are not considered insurance contracts under the standard. They actually have their own totally separate accounting rules. So let's go back to that term we just saw, DPFs, or discretionary participation features. It sounds complicated, but it's not. In simple terms, think of it as a feature where the insurer might give you an extra payout, like a bonus or a dividend. But, and this is the key, it's not guaranteed. It's totally at their discretion. Okay, pop quiz time. Let's test this with a real-world scenario. Let's say a life insurance policy offers a potential cashback reward if you don't make a claim for a few years. Is that cashback feature a DPF? Go on, take a second to think about it. And the answer is yes, absolutely. The key words there are potential and if. Because that payout isn't guaranteed, and it depends on something happening or not happening, it's a classic example of a DPF. And that means it falls under these new IFRS 17 rules. So we've gone through the old problems and the new solutions. We've talked about the rules. But let's zoom out for a second. Why does any of this complex accounting stuff actually matter to anyone who isn't an accountant? Well, it really boils down to three incredibly powerful benefits. The financial reports are now more useful because they reflect today's world, not yesterday's. They are more transparent because things like risk are no longer hidden in the fine print. And most importantly, they are finally more consistent. For the first time, you can truly compare Company A in London with Company B in Tokyo and know you're speaking the exact same financial language. At the end of the day, this big shift to IFRS 17 isn't just a technical update for accountants. It's about providing a much clearer lens for all of us to see an entire industry. It's a whole new foundation for understanding and analysis, which leaves us with one final thought to chew on. Now that everyone is finally speaking the same language, what new stories will the numbers be able to tell us?